Welcome to Middle Class Matters Business News in English from Dr CMA Alagesan. Pradhan Mantri Jan Arogya Yojana PMJAY. The various manipulations and mischiefs taken place in this. Part number 16 continued. Grants lying unspent with SHS. PMJAY guidelines on utilization of grant in aid for administrative expenses provide that under no circumstances should the grant in aid be left unspent. Audit noted unspent balances amounting to rupees 98.98 crores and rupees 128.13 crores and rupees 139.67 crore at the close of 2018-19, 1920 and 2021 respectively, ranging from 16 to 100% lying with 20 SHAs, thereby resulting in underutilization of administrative grants. NHA, while admitting the facts, replied in August 2022 that in the absence of any estimation and plan, release of grants at the fag end of the financial year and outbreak of COVID-19, the administrative grants could not be utilized. In this context, audit is of the view that the scheme is in its fourth year of implementation. However, the administrative grants have persistently remained unspent since inception of the scheme. NHA is to ensure that administrative grants should not remain unspent. 6.7. Non-remittance of interest. PMJAY guidelines stipulate that in case any interest is earned due to funds lying unspent in the account designated for receiving the grant in aid for administrative expenses, the central government shall have the first right of claim on such interest earned and the interest shall be transferred back to the NHA. 10 SHAs in Andaman, Bihar, Chandigarh, Jammu and Kashmir, Jharkhand, Madhya Pradesh, Puducherry, Rajasthan, Tamil Nadu and Uttarakhand did not remit interest of rupees 22.17 crore earned by them on unspent grants to NHA. NHA, while accepting the facts, stated in August 2022 that it has issued instructions to all the states to deposit the interest earned on central share provider. Those states who have not complied with will be asked to strictly comply within this given time period. Those states and union territories who have spent the interest earned will be asked to return the amount. 6.8. Non-refund of premium by insurance companies. PMJAY guidelines provide that the insurer will be required to refund premium if they fail to reach the claim ratio specified in comparison with the premium paid, excluding GST and other taxes and duties, in the full period of the insurance policy. Audit noted that refund of premium of 700.10 crore was recoverable from the insurance companies in 6 states and union territories: Gujarat, Jammu and Kashmir, Ladakh, Maharashtra, Meghalaya and Tamil Nadu. Out of this, partial recovery of only rupees 241.91 crore in 3 states and union territories: Jammu and Kashmir rupees 16.85 crore, Maharashtra 193.55 crore and Meghalaya 31.51 crore had been made, and remaining amount of 458.19 crore for the period from 2018-19 till June 2022 was still recoverable from insurance companies in all 6 states and union territories. NHA replied in August 2022 that it will seek final settlement statement from all states and union territories implementing the scheme in insurance and mixed mode. 6.9. Non-refund of 3.31.28 crore by West Bengal due to non-implementation of PMJAY. A memorandum of understanding (MOU) was signed July 2018 between NHA and Government of West Bengal for the implementation of the PMJAY. NHA released on 17th September 2018 central share of rupees 193.34 crore, rupees 176.56 crore and 16.78 crore on account of grant in aid and administrative expenses respectively. Government of West Bengal communicated in January 2019 to the NHA its decision to withdraw from the scheme. NHA asked in February 2019 the state government to refund the grant in aid amount along with any interest amount earned by them. The state government in March 2019 refunded 162.06 crore as detailed below. Grants in aid released by NHA 176.56 crore, grant is utilized by state government 30.45 crores, grant refunded 146.11 crore. Grants in aid administrative 16.78 crore is released. Grants utilized 0.83 crores, grants refunded 15.95 crore. Total 193.34 crores. Out of that, 31.28 crore was utilized, 162.06 crore was refunded. NHA replied in August 2022 that money was spent on treatment along with GIA admin used for setting up SHA etc. and was hence not returned by the state. Therefore, there are no dues pending as on date. However, in December 2019, NHA had stated that the matter would be referred to the state government to refund the remaining amount of 31.28 crore along with interest earned on grant. The two sets of replies from NHA are contradictory. Audit is of the view that NHA should issue specific instructions to address such cases. 6.10 Release of grants to SHAs without obtaining audited statement of accounts. As per sanction letter issued to SHAs while releasing the grants, SHAs are required to furnish to the NHA an annual utilization certificate along with audited statement of accounts in respect of grants in aid received during various quarters in Form 12C as per GFR 2017, which shall furnish that the grants in aid has been utilized for the purpose for which it was sanctioned to the SHA by NHA. The utilization certificate shall be signed by CEO SHA along with Head of Accounts and Finance Department. During the period 2018 to 21, audit noted that 18 SHAs furnished 212 utilization certificates amounting to rupees 4,115.35 crore without audit statements of accounts. Out of these 18 SHAs, 7 SHAs furnished utilization certificates without signature of the competent authority. Table 6.6 Release of grants to SHAs without obtaining audited statements of accounts. 16 states and union territories, total amount 1076.62 crores. 2019-20, 16 states and union territories, total amount rupees 1843.340 crores. 2021, 17 states, 1195.33 crores. Total is 4115.35 crores. By accepting utilization certificates without audit statements of accounts and utilization certificates without signature of the competent authority, it wasn't clear as to how NHA ensured that grant was utilized for the purpose it was released. NHA, while accepting the audit observation, stated in August 2022 that it has been constantly pursuing with the states and union territories to share the audited financial statement. Audit also noted that 6 SHAs, Himachal Pradesh, Jammu and Kashmir, Madhya Pradesh, Rajasthan, Tamil Nadu and Uttarakhand furnished inflated utilization certificates amounting to rupees 38.24 crore to NHA. NHA replied that SHAs furnished utilization certificates as per the actual expenses incurred during the year and not as per financial year. NHA's reply is to be read with rule number 238 of 2 of GFR, which provides that subsequent grant should be released only after utilization certificate in respect of grants of preceding financial year is submitted to the ministry or department concerned. 6.11 Non-implementation of PFMS. Expenditure reforms implemented by the government include introduction of sunset clauses in all public expenditure programs so that unprotective legacy expenditures can be brought to an end. Introduction of Public Financial Management System PFMS for tracking expenditure flows to its objectives, reorganization of development schemes leading to rationalization and merger and dropping of schemes so as to ensure efficient management of public expenditure. In September 2017, Government of India also directed that releases for central sector schemes for all levels of implementing agencies are only to be made through PFMS, and further releases shall only be made based on balances available in PFMS as per EAT module for the respective agency in line with rule number 230 of GFR 2017. Both NHA and SHAs are registered on PFMS for receiving grants in aid from Ministry and NHA respectively, whereas hospitals, sub-level implementing agency were not registered on PFMS. In the absence of PFMS, NHA has been accepting and manual utilization certificates provided by SHAs, which are based on accounts released by SHAs to hospitals and implementing agencies. NHA replied in August 2022 that it releases central state of funds using PFMS to the state SHAs account. However, funds to the hospitals are released to the hospital against the claim submitted by them through TMS, which is integrated with the bank for smooth and paperless transfer of funds. For every transaction, a unique UTR number is generated, which ensures money released to hospitals are duly accounted for. Every amount released to states using TMS can be duly tracked and monitored. However, NHA's reply is silent about accepting manual utilization certificates from SHAs despite the latter being registered on PFMS. NHA is to ensure receipt of utilization certificates from SHAs through PFMS. Further, due to lack of clear mapping of PMJAY beneficiaries and beneficiaries of state-specific schemes, there was no clarity on how states segregated these claims into state-specific schemes and PMJAY for submission to utilization certificates. Please like the video, subscribe to the channel, and share it to your friends and relatives as an information sharing and knowledge distribution. Thanks for watching.